Hey everyone, welcome back to Crypto's News. It's me, Omar Bam, aka Crypto. So I don't know if you guys have been around for the great panic of this weekend. I did a short video kind of covering what the panic was about. And if that is the case, I think things seem like they may not be as panic worthy anymore. So you're seeing today nice moves in Bitcoin. You're seeing nice moves in Ethereum, which passed like $1,570 when it was under $1,400. You're seeing stablecoins move back up. USDC is sitting around 96 plus cents while I'm doing this video. DAI a little bit lower than that. I had seen USD drop as low as 91 cents at one point, which is crazy. So what some people were doing was, if they didn't think USDC stablecoin, of course, if they didn't think that Circle was going to go under, if they didn't think USDC was going to go under and everything would be fine by Monday, what people, the big trade was basically to try to accrue USDC as much as you can, very cheap, around 91 cents or whatever low you could get it at, and then wait till tomorrow, Monday. I think you can still earn that 4%, right? Assuming it goes back to $1. So basically buy as much cheap USDC as you can, wait till tomorrow when the peg returns, or this week or whenever it returns, and then sell it back for the full dollar and make back whatever percentage point. So that was right. You have to think about the risk here. Of course, you could be getting as much as 9% if you had bought it at 91 cents, 9%. But what if something does go wrong with Circle, USDC does get shut down and doesn't come back? Then in that worst case scenario, you would lose 100% of whatever you bet. So it's like a risk reward of, is it worth trying to get 9%, a quick 9% or whatever term, 9%, but risk 100% or whatever percentage? And that was basically what decision folks had to make. So you had one that was thinking, whatever, I'm out of this. I actually don't even want any USDC at all, any stables. So they took $2 million, tried to route it through their DeFi, and they ended up losing pretty much all of it because one of the liquidity providers in one of the pool did not have enough in one side of that pair. So basically you had one transaction where the individual lost $2 million, and people were like, that was the dumbest move. You had others that again have made some profit already, have taken profit, are waiting till tomorrow to see about taking profit. You have people who have gotten completely out of stables altogether, not trusting them anymore, saying we should take stable out of stable coin. You have those that are back into Tether saying, like I had retweeted something like, the only thing that you can be sure of are death taxes, God, and Tether, or something like, or no, the only thing that will be left after a nuclear apocalypse will be roaches and Tether. And I thought that was interesting. So yeah, just a crazy amount of movement that's been happening over this weekend. You had Ethereum fees spike all the way back up to huge amounts, like $11 plus per transaction I had seen at the peak. But you have the Federal Reserve as well coming out to try to stop some of this potential contagion. I think it's been announced that they're going to be moving one of their meetings up on March 13th, up ahead of schedule. So will they be pausing rate hikes, talking about slowing down rate hikes, because it's led to a scenario where it's better to be in bonds and have money parked at the bank. So depositors might be pulling their money out of the bank that's not paying any sort of percentage yield in order to try to get their 5% on 30-day bonds, basically 4 point whatever percent. Better to just take your money out of the bank and buy some bonds on using your money market account at your favorite brokerage or whatever. So that I don't think that's a crazy amount of possibility that most of the money is going to be pulled out, right? Like, because you had Silicon Valley Bank had depositors, 97% plus of which had over $250,000 at the bank that was not insured, and therefore they had more of an incentive to pull that money out when there was a potential crisis. Plus, they were people who deal a lot more with money than your average retail person with a bank account that has less than 250,000 bucks. So they know that they should know that they're protected by FDIC insurance. Most people do know that they're protected by that, so they wouldn't necessarily rush to take their money out of the bank right now in the same way that you saw folks take money out of the bank at Silicon Valley Bank. But still, I think the Federal Reserve is going to have to think about this and how this is could affect other banks as this does happen. I mean, you see herd mentality, right? That's kind of what drove this. Tweets from Peter Thiel, a big Silicon Valley VC, highly respected, saying to pull your money out of that bank, leading to a run on the bank that basically caused this crisis. What would happen if people did wake up to the fact that inflation is killing them and it might be better to hedge towards these bonds instead and make some sort of yield that way? And so I think that they have to think about these sorts of things, and that probably is what's going to be happening at this meeting. I think that they're going to be waiting for like 1 or 2 more major bank crises before they reverse course and start lowering rate hikes. I could be completely wrong on that, but I think this is the beginning of a bunch of other problems that are just beginning to surface here with their rate hikes that have been really fast. And that's what they wanted to do. They've wanted to break things. So now they've broken this. So I think it's time for them to recollect and see what their future, what future momentum they want to have here with these rate hikes, if not reversing course on that. I think this is all in plan, right? Because what was that? The World Economic Forum, it was said that by 2030, you'll own nothing and be happy. So it's 2023, on track for that. I think they're trying to collapse things, trying to cause a banking crisis, trying to usher in central bank digital currency and move towards that where they can control yields better, understand spending better. I think that's like the altruistic goals, right, that they would have about helping society, but realistically it will lead to a surveillance state that the likes of which we've never even possibly imagined. So I think that a lot of people potentially will be losing things like homes, will be losing assets and so on. That's exactly what is expected by those at the top of the finance game, right? The finance world, the banks, because controlling the spigot of money, controlling the flow of money, controlling money itself, you can control people's lives. And tinfoil hat theory, you basically control the money and you control pharmacy, right? That's sorcery, the root word of pharma, whatever, right? Like, you control people, you control people's lives, you can dictate directions, and this kind of control being seen as necessary for the welfare of all. But at the end of the day, looking at game theory, I think every individual is looking out for themselves, and those at the top of this pyramid really don't care that very much about you, as long as they're getting richer, they're owning more assets, and they're dictating again what direction they think the world should go. I believe way more in sovereignty. I trust the individual way more, and that's why I believe in cryptocurrencies. That's why I'm a part of this. But it's going to be very interesting times going forward here. Janet Yellen says, "Oh, head of the Treasury, everything is fine. No reason to believe in contagion." She might be right with this one, but if things keep up like in the way they have with these rates high, with rates potentially going higher, I think it's going to be crazy times ahead. Either way, it's going to be crazy times ahead. Whether they lower them, raise them. If they lower them, they're basically admitting inflation is a problem they cannot solve, right, by traditional tools. So maybe they'll come up with studies. They'll have economists write new studies and new papers saying, we were wrong in thinking that raising rates is what lowers inflation. What lowers inflation is something else completely. So we can lower rates. I imagine something like that could be happening, but I think inflation will be here to stay, as many are noting, and their powers are dwindling here. Scary times to be at the Fed, I suppose, for the good individuals, right? Because they should be blamed for a lot of what's going on here. I don't know if that ultimately will be happening. The propaganda machine is going to be in full swing, right? Because the sponsors, those with the most money to advertise on television and do so, you can't really say much bad about them. The banks, again, the pharmacy companies and so on. Not going to name exact names of companies, but anyway, it's all distorted, and I think social media and the internet has made it so communication has become more dispersed. So more and more people can understand what's actually happening, or look at alternative ways of thinking rather than what the sponsors want us to think. And this is a problem, I think, for some of the heads of the finance system and so on. So it'll be a super interesting battle playing out, but I know which side I stand on with the people, with cryptocurrencies. May Bitcoin, Ethereum prevail. Love you all. Take care, much love, and stay cryptic. Peace.